Queiram, por favor, tomar os vossos assentos. Ladies and gentlemen, kindly take your seats.
Now, we'll line up.
Vamos iniciar a nossa sessão. Vamos iniciar a nossa sessão. I kindly invite Mr. Tilman Ehrbeck, a partner from Omidyar network. He's going to moderate the next session. Please, Mr. Tilman, take the floor.
Thank you.
He is going to moderate the next session under the theme, Inspiring Innovation to Advance Inclusion.
Thank you. Is this working? There are a few seats available in the front if you want to move in. So welcome back from the break. We are switching gears a little bit in format, and this is our first plenary panel discussion. And it is on the theme, the topic is the theme of the GPF 2015, which is Inspiring Innovation to Advance Financial Inclusion. And I join many of the comments from the audience earlier in thanking Madame Graça Machel to remind us very powerfully and forcefully that innovation is not an end in of itself. It's obviously a means to reach far more people with a broader range of financial services at a lower cost, in particular the groups that are disproportionately excluded. And we have 4 innovators, if you will, on our panel, 4 people who have been through very inspiring journeys already and who have aspirations for the future, and we hope to learn from them. So I'll ask you guys to join me on the podium here. Governor Benno Ndulu from the Central Bank of Tanzania, which has done great things for financial inclusion. Then we have James Mwangi, CEO of Equity Bank, based in Nairobi, but with 10 million customers now, the largest bank, retail bank in Africa, actually, and a majority female customer base. We'll come back to that. Then we have Alfred Hannig, who doesn't need an introduction. And we will quiz Alfred today on AFI as an innovator. So he is switching roles. And then we have Stephen Kehoe from Visa, which is innovating for the 21st century. So you will have noticed this is an all-male panel. But I know you guys care about the disproportionately excluded segments, women, youth, and you are forewarned that I will quiz you on that. We owe that to Madame Graça. This session is webcast, I've been told, so I can't promise Chatham House rules. You might be quoted, but I still hope very much that I can extract from you, on behalf of the audience, personal insights around your journeys and what inspired you and what the innovations were. So that is my objective. And our session plan is very straightforward. We have an hour, and we will do a first round of conversation with the panel on the lessons learned from the journey so far. And then we do a second quick round, also up here, on some of the opportunities and aspirations looking forward. And then I absolutely want to make sure we have enough time for a couple of rounds of questions, maybe 2 rounds or so, from you all, presumably building on the first part of the session. So that's the plan. And now I sit down quickly. Governor Ndulu, I will start with you, if that is okay. Tanzania has doubled financial access for working-age adults in 5 years, between 2009 and 2014, from 27% to 55%. You were appointed in 2008. Maybe this is not coincidence. Tell us quickly at the outset, what inspired you? How did you get the elephant dancing back in 2008? You have a lot of central bank colleagues obviously here. How did you get the organization going?
Well, I think when I stepped into the current position, there were three things that helped me focus on financial inclusion. The first one is a very small story. In 2007, I happened to be at a meeting where two very young people made a presentation on introduction of sort of mobile financial service using a system called e-Fulusi.
Mm-hmm.
Very unfortunately, I think we didn't take advantage of that. My colleague and my dear friend in Kenya subsequently took advantage of that, and it became a challenge to me, learning from what the possibilities were to use that innovation to bridge both geographical gaps in terms of distance and to also be able to serve those that are small in scale, small customers. And I knew for sure that brick and mortar wouldn't be able to solve this problem except by bridging this distance using technology. This was one. Two, there is no way that we could get our monetary policy effective in implementation without bringing a larger portion of our population into financial intermediation, including banking. So in a self-serving way, the only way you can actually make monetary policy effective is if you have included a much larger portion of your population into the formal banking and non-bank system where we can influence. And thirdly, there was a very clear sense in the country about the need really to address poverty. And one contribution that the central bank could make is by really removing the bottleneck on finance. And therefore, we agreed as a group to include financial inclusion in our mandate and become then more or less to agree to be the champion for
as
that.
part of a broader inclusive growth
That's
aspiration for the country. But
That's
the
right.
first lesson, aspiring innovators, was to recognize a missed opportunity.
That's right.
Okay. Now, that was your first lesson. As you had this success of doubling access in 5 years, what were the 2-3 success factors for that from your perspective?
First is to be bold.
Bold, okay.
In order to spur innovation. By letting innovation to run ahead of regulation. It might sound crazy or maverick, but we did have comfort in two things. One is we did have a precedent, which, as I said again, Kenya was a good example for us. And two, just the scale of risk, because in most of these cases on the non-bank side, we could limit the size of transactions, and therefore in terms of the risk that we had to manage was much smaller. And therefore that together with the fact that we had interaction through AFI with colleagues, you know, there is nothing more assuring than seeing that others have done this, and you hear from the doers. It gives you the trust, it gives you the confidence to pursue this. So my value of belonging to the AFI network, for me, goes beyond my ability to read reports.
Okay.
It's really to be able to have one-on-one with people who have done it, and they are the ones that inspire the confidence to me.
So being bold in the comfort of company.
Yes.
Let me ask the gender question. Were there any policies, or did you observe that any of the things that you put in place help women in particular from a financial inclusion point of view?
We have been a bit late on this,
Okay.
but we have already made a very clear decision within our national financial inclusion network, framework. We are now going to have a very clear addition of the gender dimension, but starting first from having a serious look at what is the current status. And apparently in looking at this, we found that for non-bank and informal financial services, actually the gender gap is either much smaller or women are slightly better included. It is in the banking side.
Okay.
That's where the biggest gap is, and we are going to have a focused prioritization on that.
And over the 5 years in the banking sector, did the gender gap narrow in Tanzania? I think
in informal and non-bank,
but not in the
but
banking
not
sector.
in the banking side.
Okay,
Yeah.
okay. So that is a segue to you, James. Thank you so much, Governor, for this first round. James, thank you first of all to be here because, of course, policy matters, which is why AFI exists. But at the end of the day, private institutions need to deliver, mobilize resources, and intermediate. So thank you for being here as a private sector representative.
Thank you.
You took over equity in 1994, 20 years ago, at the age of 28. I did check that. And it was essentially a bankrupt building society. I think half the loan book was bad. You had 27 employees, and you had 5 branches, which didn't look so great. I have a picture here. On the left are the equity branches that you found. Today you are, I mentioned that already, in terms of customers, the largest retail bank in Africa. What gave you the courage or even the audacity to think that big?
Thank you very much. I think maybe when I understood what financial sector does to an economy, that financial systems allocate resources. And those excluded, it means they are not allocated resources. So it's like condemning people who are excluded to the status quo. If they are poor, they are condemned to remain poor because they are not. The second thing, they are not integrated in economic activities. That is really what encouraged us to see whether we could be able to get as many people to be included in the financial system. And that was the genesis. It was motivation of get people to be on the platform where resources are being allocated. And that's why we formed the vision of equity, helping people to transform their lives. So it's the enablement to socio-economic transformation of the people.
So for you too, the starting point for innovation is an aspiration and an outsized
It was purely aspiration.
Okay.
Yeah.
So then you took this technically bankrupt building society. What did you do? What were, in retrospect, the 3-4 things you did that explain the success, the phenomenal success that you have had?
The first one was being customer-centric, asking ourselves, why were 96% of the population excluded? What is it that made them not access financial services. And we realized there were a number of barriers. The first barrier was product relevance. Most of the products were of a quantum, or the size of the transaction was too big for the general population, particularly the account opening balance and the minimum operating balance. They were too high for the ordinary people. The second one was ledger fee. The ordinary people could not understand how they kept on losing their money on monthly basis in the name of ledger fee. They couldn't understand who is this who takes their money on monthly basis. And the third and most important thing was access to liquidity. Ordinary people transact and plan on a transaction basis. And so when you create restrictions to access to liquidity, by that time, people could only be allowed to withdraw once every week and a maximum in Kenya shillings of 10,000. They could not understand what happens when a child gets sick and you couldn't access to your money. Or you got a cow that you wanted to buy, but the bank could not allow you to withdraw the amount that was the cost of the cow. So we removed the three things. We removed the ledger fee, we removed the minimum balance, we removed operating balance, and then we removed the restrictions both on frequency and amount. And that seemed to have been the response that created massive access. As we moved on, we realized that the next biggest challenge was cost. And it was not the banking cost, it was access to the bank. The distance covered, and as the governor said, was too expensive in public transport cost and amount of time. So we then started pushing, eventually, mobile banking. Then from mobile banking, agency banking. And we took banking to where the people were and eliminated the financial cost of access. That again created another wave of huge customer base. And as you said, by doing those, then of course there were others like collaboration with the central bank. We realized we amended about 14 clauses in the regulatory framework that were restrictive. So that collaboration and partnership, what we could call very smart regulation from the central bank, allowed us to do those. So a partnership and collaboration. And of course, there were other people like Microsave, the Bill and Melinda Gates, FinServe. So they all collaborated and we worked together and each brought their competencies so that we could be able to overcome. Then lastly was the use of technology. We realized to bring the unit cost of service, we needed to use technology. And today, 80% of all our customers are served outside the brick and mortar infrastructure of Equity. They're either served at the agency network, which serves about 56% of all our customers, and the mobile banking platform, which is now the fastest growing, and about 24 are served at alternative delivery channels. So the use of technology was a huge enabler. And let me add just before, because we have 54% of our customers as women. We realized that we needed to empower or enhance the capacity of women. And for instance, like the last 3 years, we have trained 3.6 million women on financial literacy on a 13-week training program. And now we have taken the best performing 25,000 and we are taking them through a 3-year entrepreneurship program. So that capacity building on the general population is also necessary.
Is your employee based also?
The other thing we chose was community-based employee employment program. That the employees could speak the local language, could understand the culture, and could interact with the population at the village level. So out of the 9,000 members of staff, they're employed based on where they will be located. Okay. So that they can be able to talk the local language, interact and respecting the culture of the community, and develop products that are appropriate for various communities. So each branch is like a standalone business unit that it develop its own unique products that are customized to the community it is serving.
Under this banner of customer centricity, did you anything specific to close the gender gap?
Yes, of course. One is representation in the management. If you look at Equity Bank, the director of strategy is a lady, the director of HR is a lady, director of operation is a lady, director of credit is a lady. So they inspire the community. And essentially, they also bed the rules. But lastly, it was the question of developing products. One of the most powerful products we have is called Fanikisha. And Fanikisha is enable, or make it possible. And it has 9 products that graduate with the segments or classes of women. And purely, it is tailored specifically to address the gender inequality in terms of enablement to financial access.
Okay.
Yeah.
Thanks so much for this first round. I turn, Alfred, to you. You were part of the startup team of AFI, and AFI got off the ground in 2008 with a focus on expanding access to financial services and innovation. And the global financial system at the time had just taken a beating for being very innovative in other dimensions. So it was not exactly viewed positively. So what inspired you and AFI? What did you guys get going?
Yeah, thank you very much. It's actually a nice introduction. I can start right away with a very recent quote that I got when I was sitting in the World Bank in a meeting. And I talked to a lady who I had talked to 9 years ago, and she admitted to me, that time when you came, we actually thought you are crazy. So that was kind of the beginning. But let me go back. I mean, when we conceptualized this session, Tilman, I think our idea was to bring light into this whole concept of innovation, because we use it a lot. But I think in order to implement a successful innovation, it also needs a process. And I wanted to tell the story. Perhaps this is a process which can also, enlighten the whole thinking about innovation. So I think the first thing that you would need is an idea, apparently. But how do we bring the idea to an innovation? Now, I had been working, in some countries, in Bolivia, in Uganda. By the time I'm talking now, I was sitting in Indonesia, always with regulators, always with the idea, how can we in fact, bring more people into the formal financial sector through smarter policy and regulation. That was always what we did. We did that here and there and there. Now, I remember it was that time in 2006, and I got a phone call. And on the phone, there was the Bill and Melinda Gates Foundation. And they asked me, do you know what blue sky thinking is? I said, I'm sorry, what is that? Is that something out of the blue? And they said, no, you don't understand. Take a step back. Blue sky thinking, just think you are over on a plane, like 36,000 square feet over the sea, and you can't see the horizon. What would you do? And I said, sorry, I have never got such a question. I have to think about it. And then they said, well, I make it simpler for you. If you leverage everything you know from the national level into a global dimension, what would you do if there wouldn't be a funding constraint? So that was my question. And I was overwhelmed. So I went back, an idea came up. I mean, the idea was basically something that was so obvious because I had seen that many of the innovations and solutions that we are talking about are already emerging in the global south, so to speak. And the idea was, how can we bring that to the daylight? So that was the idea. That was number one. But in order, to go forward with the idea, you need a second thing. And that is, you need a strategic promoter. And that brings me actually to the role that GIZ played during that time. Because I was a GIZ employee, I came with this idea, and there was like 35 million US dollar waving somewhere. And of course, in this organization, we are now talking about, everyone got excited and wanted to jump on that and wanted to help me. But there was a strategic promoter. It was a guy named Dresrus, and then very soon later, Christoph Bayer took it over. They said immediately, no, stop. You need freedom. you need liberty, you need room to maneuver, you need space. And they created space. They actually protected me from all these people who got so excited. And I could move forward. They even gave me a budget. So I could prepare. Silently, you know. No one actually really knew about it, but I had the backup from the very top. So that was number 2, the strategic promoter. And the third one, which I need to mention, you need allies. You need allies for the idea. So I walked out and I talked to regulators. And I went to Egypt by coincidence. I talked to Deputy Governor, Assistant Governor Lobna Hilal was her name. I presented the idea. She said, "Oh, this is music to our ears." She was in. I was in Indonesia. I went up to Deputy Governor Mulyaman Haddad. He said, "Well, this is what I have been waiting for." I said, "Oh, if that's like that, I go further." And we wanted to build a global policy forum. So I went to Kenya, and I met a guy. He's sitting here, Governor Ndulu at that time. And I wanted to ask him, do you think we can manage to organize a global policy forum in 7 weeks from now? And he was looking at me and said, "You know, I don't give my card to journalists." He said. 5 minutes later, when I had left the room, the staff came and said, "The governor is in, we do it." Then we had the first global policy forum. So the allies are very important. And when you show this picture, and I think there is a picture that my colleagues prepared, I hope it comes, you will actually see what that was. So the upper picture is the first steering committee meeting of AFI that took place in 2009. And then the other picture down there, that's the first global policy forum in Nairobi. I mean, no need to say that we wouldn't fit onto this picture now, but by then we still fit. Now, this was the third one, which was really the allies. And I think the last thing, but what I would see is important, is the long-term vision. Because at this very first steering committee meeting in July 2009, the people there, and Nestor is with us, decided that in 2011, at the Global Policy Forum, we will make a decision on whether this initiative is going to become independent or not. Thank you.
Okay. Thank you, Alfred. So you echo vision, aspiration, you mentioned it last, the space to innovate in an existing organization in your case, and then the allies to drive it forward. We'll come back to how do you maintain that going forward. I'll ask you that in our second round, but I want to switch to Stephen from Visa. So Visa as a brand is over 50 years old, and the card network that we all know has operated since the 70s. Visa transformed from a member-owned association into a for-profit company and went public. I have a picture here as well. Here it is. This is the opening of the ringing of the bell in March 2008. And since then, transaction volumes for you have doubled. So you just continued as Visa to do very well. So how do you, different setup, how do you innovate successfully in the context of financial inclusion when you have done already so well serving the half of the world that is doing pretty well? How do you maintain this innovative spirit?
It's a great question, and actually it's interesting listening to the way in which Alfred set up a number of the ways in which he went to approach the creation of AFI. There's so much there that you can sort of think about that you can relate to any big organization in which you're trying to drive change in terms of some of this blue sky thinking, in terms of, you know, what is possible if budget were no option, thinking all of those things through. But just going back to that picture, it's interesting. I mean, it feels like a world away from where we sit today in Mozambique, thinking about financial inclusion, to look at an opening of the launch of an IPO on a stock exchange. You're right, Visa's done extraordinarily well ever since then. But in many ways, over the last 7 years, it's a company that has really tried to change enormously. We've benefited from being in a growth industry where there is just a relentless trend towards the electronification, the digitization of transactions all around the world. And you know, you sometimes think that you could sit here and do nothing, and you continue to grow, you continue to make money doing all of this. But the truth is that the last 7 years, I think, are absolutely no indication of where the next 7 years will be. And that's the reason why company like Visa, like many organizations, certainly in the payment space, have got to continue to think about how we're going to change. And that thought process of how you're going to change is not easy, because as you say, Tilman, everything seems to be going right. So how do you begin to sort of reinvent what the organization sort of stands for?
And cannibalize a successful core business. So say more. How do you do that?
Well, I mean, one of the ways in which you sort of look at that is to think we've been, Visa has been very much, you could say, a card player against very affluent consumer groups around the world. We have been. But by the future, we know that by 2022, half of the world's population is going to be emerging into the middle class. That fundamentally changes the nature of the customer dynamic. We think about how we're going to be servicing those customers in the future through our bank clients. The fact is that, as Madame Gracia was saying in, I think, the presentation before, it just makes good business sense to think about laying the foundations for future growth of the organization, and at the same time, try and achieve great social good in driving financial inclusion. So we look at all that and we think, well, if we have an emerging middle class that's going to be half the world's population in 7 years' time, between now and 22, if we look at all of the new players, some really big digital powerhouses that are starting to come into the payments landscape, we as an organization have got to be thinking about how we're going to innovate to change within the organization to do that. And so the challenge is going about building that momentum within an organization that may, in essence, be resistant to much of that.
And what do you do specifically to do that? I understand the rationale, but how do you do that? How do you make sure the 800-pound gorilla is not squashing the innovation? Any insights for the audience?
I think there's a number. I think the first is you have to be clear on why you're doing it. Okay. First of all, very, very clear. So, yes, Visa is very interested in helping drive social change and impact throughout the world, but we're also interested in growing the business. And we think that there's a natural confluence between those two things. Now, we have to be able to demonstrate the business growth in the future to be able to sort of prove that within the organization, but I think we're